I'm going to go over some of the reversion trades here really quick. Looking at this chart, I'm going to go to the beginning of the day today for NQ. And I've just got a couple of indicators on the screen. I've got um, the ribbon master gap trader, which is just really just showing me the previous close, which is what this yellow line is. One of the, I'll take off this ATR stop. The VWAP, this blue line is VWAP plus the standard deviation bands. This is really a staple for me that I use. I made this indicator a long time ago. It's there's a bunch of variations of this on TradingView. Plenty of people have made this, but I think I got this one right as far as the calculations. But I really like it with all the different VWAPs that you can display. Unfortunately, it's things like monthly, quarterly, or yearly will not show up on a 5-second chart. There's just not enough data. But then show the VWAP bands also. And I just have the standard deviation 1 plus 2 plus a little shaded background, just so it can do the minimalistic view that I like. I don't like a lot of clutter on the screen. I like minimal amount of information on the screen so that I don't get confused, and so you don't have information overload. Anyway, okay, so start of the day, the VWAP bands start to expand with the volume, and what I have on here for the ribbon is just the trend MAs, and I have the first one actually set to invisible just so that I can only have 2 moving averages on the screen. Right now I'm using an account of about of a size of 250,000. That's the account that I'm using. The reversion trades only, I have this box checked and I have it set to reversion mode. I have percent risk as the quantity type, meaning that I'm going to be taking a certain number of contracts out or lots or shares, depending on what you're trading, that will give me 0.35% risk or less for each trade. Now, the quantities that are shown in the trades, if you hover over a given trade, it'll show you what the quantity is actually was 7.9 for the quantity. Obviously, you can't do a fractional contract for futures, but I only show that there just for some. I'm probably going to do an update to this to make it so that you round the quantity to either the next lowest amount, which is going to fit the risk tolerance because you don't want to go over. But right now it's set to 1/10, just to give you kind of a more clean view of exactly how much you would get. If you were using the MNQ micros, you would take out 79 exactly to get as close as possible to the risk. So 0.35 risk, 0.35% risk of 250,000. It's going to take a second for this to load. If you actually show the risk size here and risk amount, we can actually get a more in-depth view of exactly how much we're going to risk here. So 0.35, let's see, if I take 0.0035 times 250,000, that's $875 is the maximum that I'm willing to risk per trade. If I hover over this now, again, it's going to show this historical trade that the risk was 22 ticks and the risk was $869. So the closest that this would get me to $875 using 1/10 of a contract was 7.9 contracts. If I did 8 contracts, I would have gone over that $875 risk threshold. So that would have knocked me over. So in the future, when I actually do kind of a floor operation here, it only give you 7 contracts because there's no such thing as a fractional contract. So that would have dropped you down to maybe a tad below, maybe something a little bit below $800 of risk, and your reward wouldn't have been that much. So this trade is showing that it is a reward risk, not risk reward, reward risk profile of 1.73 to 1. That's good. Anything over 1 we like. That means that we're getting a good bang for our buck here as far as the entry. So moving forward here, just after we get through some of the logistics of the trade, the new ribbon update that was just released has something called first long. If I add an alert here, there's first long, first short building. The building phase is kind of the warning, and that's what these alerts are. So first long building and first short building are denoted by brighter green and brighter red. So this was a first short, this is a first long. This one over here is not a first long because you were already in a long. This one here is not a first long because the trend is still up. So this isn't the very first long. This is not the very first long either because the trend is still up. Same with this one up here. So only the very first one in a newly established and confirmed long trend is this bright green color. And you can set these in the style tab. You can see the actual trade building. There's a bunch of different colors here. So the bright green and bright red are the first. Yellow is more of a special type of long. It means like a first test kind of long. I take these two, but I can go more into that later. But key here is, how do we trade, or how am I trading? The major trade that I'm taking is the very first trade, this first trade building. Then you can set an alert for these that I just pulled up that alert box window that I had a second ago, where actually this one right here, where you do add alert, right click this, add alert on M8 ribbon master, first long, first short building. You can have it so that it's open-ended, you can do all these different things here, play an alert to yourself. You can even send a webhook to yourself, or send an email, even send a text message, send email to SMS. You can do that in the US. What I used to do was use vText, and that just is like an interface that will receive a message from an email and forward it to your specific phone number if you really feel like it. So you have all the tools here to succeed, including setting up time windowed alerts, which I'll go over in a second. So this first long right here, these are the most valuable. First long, first short, and reversion only mode. Remember that we're doing only reversion trades. We're on reversion trading style, and we have this box checked for only reversion trades. Reversion trades are marked by these special little target, little bullseye guys, and that's just the building mode. This is warning you. All of the indicators that I've ever built, all the strategies that I've ever constructed, there's always a warning, some kind of a building phase that a trade is potentially getting ready. So it's a first alert that a trade is preparing and it could possibly execute. Not all the trades don't always execute, like back here. This trade was potentially building, but the price went too far. So it got nullified and there was never an entry. Just like this short right here, there was a potential trade short building, but the price went too far. And what constitutes the price going too far is a host of algorithms in the background that's saying, don't get in this trade. It was nullified. It's no good. We don't want to. So that was actually an alert for a first long building or first short building on gold, actually, gold futures. So there is the chance that not every building phase results in a trade execution, but this one did. This was a good trade. We executed somewhere around here, got in this trade for a nice 1.7 to 1 reward risk. Good trade. So what I will do is I will take only this first trade, close half. This thing told me to get into 7.9 contracts. Let's just round that up to 8. Let's say I closed half here. It said that my reward was about $1,500. So if I close half, I'm going to get $750 on this trade. Hold the rest. You can either hold the rest on this trailing stop, which are these blue dots that were trailing behind it. And it said long stop underneath it at the time, but we're not. This is a historical. So it's not actually showing you the label with the actual value of the long stop. But in real time, you would see the value of that long stop, which has like a horizontal little line overlapping it and showing you the current value. Stopped out right here where this X mark is. You could either do that, hold the other half to where that X mark is, or what I like to do, hold this while these green trend MAs are green, while both of them are green. And in case you are looking at all three, which is the natural look for this if you actually had these on. If you're looking at all three of them, there's actually three MAs. I'm only looking for the middle one to stay green. That's the one I care about, just that middle one. Another one built. This is actually probably a good trade. We're nicely hugging, or we're hugging the VWAP bands, which is this upper shaded blue background. Kind of nice here. And so sometimes I would actually take this trade. Trading is much less volatile in the Asian session. Right now, this is set to Eastern time. The Asian session for the Tokyo Open, I think, opens at 8 p.m. Eastern. So in the pre-market going into the Asian session, this first hour and a half or hour and 15 minutes, it was actually good for taking these trades. So may or may not take this trade. More conservative, don't take the trade. Just hold on to this original half position with 4 contracts that you were holding, and keep holding it until the middle trend MA turns red. So this is another one. You could have taken this trade. Still hugging the VWAP bands nicely. This was after that big sell yesterday, which would have been probably a good idea to start thinking about longs, because we thought that yesterday's daily candle on all indices looked like a hanging man candle. So there was that possibility, like we've seen before, that they could start ramping it all night as soon as the open happened. As soon as the New York session was out of the way, the USA session is over, then people, and 8 o'clock comes around. 8 o'clock is not only a key time because of the Tokyo session opens at that time, but it's also when extended hours trading ends for anybody in the United States. You can no longer do any kind of extended executions for stocks only, not for futures, for stocks after 8 o'clock. The full extended time window for US stocks is 4 a.m. Eastern to 8 p.m. Eastern time, with some caveats there too, depending on what you're actually trading, because some stocks open at maybe like 7:30 or 8:30. Some brokers don't even let you trade. But if you're on one of the other if you're on a couple of brokers out there like Lightspeed Trading or something like that, they'll give you that full 4 a.m. to 8 p.m. Session. So keep going here. Green MA at the bottom, still green, holding green. When the way that this green MA will actually get red is if the very top one actually crosses under it, just so that you know that. That one will turn red once that top one crosses under it. So not even anywhere close. We have a lot of momentum here. So here's another trade. You could have taken this one. We're still hugging these VWAP bands nicely all the way up. This is what I call super trendy mode on the daily intraday time trading. It's when you have the chance to basically take every single trade if you want. And if you actually turn off this reversion trades only, you're going to see all of the reversion type trades, not just the little target looking guys, but every single trade you're actually going to see here once this actually loads. So give it a second and it'll actually load. And what I like to do is, if I'm actually going to take those trades and they're super small scalps, I will only take them under the condition that the price on these 5-second charts, which is a 1-minute ribbon time frame that you're using, is trending inside of these VWAP bands. I will only do that if that's happening. So while this is happening, there's a lot of these trades, and a lot of them are successful. Some of them are failures, but the majority are successes. And you could technically take all of them on the way up. But I'm not really going to go into those types of trades right now. I'm just going into specifically these larger reversion trades. One of the ways that you can trade, and I talk about this all the time, is look for 1% trading gains per day. You could quit trading as soon as you cross that 1% threshold. Just walk away for the day. Some days your day ends early. Go out, play golf, go to the gym, go to the beach, go do anything. Just walk away from the computer. And some days not. You'll have wins, you'll have losses. You'll win one, lose one, win one, lose one, win two, lose two. until you finally cross the threshold where you have a couple in a row where you actually cross that 1% gain per day. That usually takes about 2 to 3 trades if you're risking what I'm showing here, about 0.35% each trade. Usually you're getting 1-to-1 reward risk or more. So that usually is taking about 3 trades to get to that 1%, 3 trades in a row, that is. Or if you're holding some along the way, you might cross that boundary depending on how long this thing trends. So still trending, still going up. And this middle green MA has still not turned red yet. Still not, the top one has not crossed over it or under it. Then there's several trades along the way that you could have taken. This one is the first failure. You'll notice a failure because the text that was left behind does not have a number above it, 1 through 5, that it was actually filled, marking where the actual fill point is as a matching number. There's 1 through 5 because you could be inside multiple trades at once, and they fill according to their numerical entry, up to 5 pyramid trades, basically. This trade failed, was never filled. You would have been stopped out at this initial stop. It never moved from the initial trade, and you were stopped out right where you entered. So max loss 0.35% again. So this would have been your first loss here if you're still taking these trades. However, if you were not taking these trades, this is right where that middle MA is actually turning to red, which is at about a price of 14.29, it looks like. Right where that happened at let's see, at midnight, 12:26 a.m. Eastern time is where that actually occurred. And that price was, the close price right around there was about 14.30. So let's go back to where we were at that first trade that we took back at the beginning. Beginning here was a trade at 13.954 to all the way up to, what did I say, 14.030. So that was about 84 points or 76 points. Wait, yeah, something between, somewhere around there. I just forgot the number that I just said out loud. Somewhere around 70 to 80 points. So that's pretty good. With 2 contracts, that's about, let's just call it an even 75 points just for slippage. And per contract, that's 1,500 times 2. Remember that I did 4 contracts, actually times 4. So the first 4 I closed, so the other 4 I held. So 75 points times 20. So that's 1,500 points per contract times 4, $6,000 on that trade. So this is how people can rack up a lot if you catch this. So like that movie that people may or may not have seen before, that called Rounders with Matt Damon, a favorite of mine. Your goal is to win 1 big hand an hour. And for trading, I would say trading this type of strategy, maybe 2 big hands per day, 2 big bets per day. You never know which one is going to be the runner, but you can improve your odds of getting that runner if you take the very first trade of the trend direction flip, which we did. And that resulted in about 75 to 80 points of a gain. And because we got in early and because our risk tolerance was good, we were able to get in with a lot of contracts. 8 contracts is no joke for NASDAQ for most traders. But since it was in the early part of the Tokyo session pre-market, we were only risking 0.75%. I mean, 0.3%, 3.35%. So the risk was still the same, but it allowed us to actually get in with more contracts, about 8 contracts. And we closed half immediately when we got to the target, just so that the trade basically got to break even. Anything greater than a 1-to-1 for reward risk, if you close half at the target, you're automatically guaranteed to get a break even or better trade. You can just hold that stop right there for a while until the price moves up in your favor, and then start to raise the stop up if you feel like it. So right here, trend direction flip. And to go even further, just to make it so it's even harder to get in, as soon as that happens, I'll update my stop to the bar right below where this middle MA actually flipped to red, right below where that happened. So right below where that happened was about 14,027. Update my stop to whatever that is. And right below that, sorry, I'm looking at multiple screens at once here. And then immediately after that, I was stopped out. So stopped out of that whole trade. Here's a trade that's actually building in the opposite direction here. This one right here was a short, first short, denoted by bright red. There was another building phase, but it actually went further. You could have taken this. I probably would have opted out taking this because I see that the day is actually strong. I'm above VWAP, which is this blue band here, by a lot. And I'm back up inside of the daily VWAP band. So I'm not expecting a big change to go down below VWAP here. I'm not yet. Here's approaching the London Open. London Open is at 3 a.m., so I'm about an hour and a half before it. It's changing to promoting the very first long trade again. So new direction change, bright green. These trades were not executed. Nothing happened. The price went too far down, so nothing happened. No execution. Here we get a second chance. Trend changed. Again, it's just bouncing around. It's whipsawing around. It's giving you this chance. First trade in a new trend direction again. The trend flipped back up to green. There's a lot of stuff going on in the background, trust me. The code for this strategy is maxed out on the lines of code for TradingView. It's like something like 60,000 lines of code. So there's a lot of decision trees happening in the background to only give you the best of the best trades based on price action only. So this trade is building. And a couple of bars later, the execution happens. This was a nice trade again, 1.8 to 1 reward risk. That's very good. Telling you again to use 8 contracts. We're getting very lucky today because we're entering these trades before the real volatility begins. That's another key. The real volatility started right here at somebody entered a big trade at 1:34 a.m., about an hour and a half before the London Open. Huge move up, probably some news headline that I forgot. This is a nice trade. Immediately after getting into this trade, it goes up something like 60 points almost to the top here. So nice trade. You might take this trade and just say, I'm going to exit when the stop exits, which is what these little blue dots are. And that would have exited you right here. You could do that. Or you could do what we did again. You could just say, I'm going to get out the moment that this thing flips red on the other MA, which happened down here, which was about 14,052, which was that close back there. And you update your stop to a recent low, probably up to this low right here, 14,051 about, and you would have been stopped out right after that. So unfortunately, this gave back a lot of the trade. I have some other indicators that would have been overbought up here that I would have looked at and said, probably get out. But it was probably a good idea just based on experience that this particular huge pop, just sell the rally. You know, take this free money that they did on a headline and use this as the pop to get out. It's easier to see on an hour chart. We were running into day Camarilla R3 here, which is this red line, running into this old cluster that cluster block that I had for March 18th. Probably a good time to get out of that. You could have gotten out. But even if you didn't, you still would have captured an extra couple of points here beyond your initial target. Here is so you wouldn't have taken these trades. These are not the first trades. You could have, but right here, this would have failed. You would have tried to have taken this trade, but it would have failed. And you would have lost some gains there. Here would have been your initial stop on this trade, you would have taken this long. It's significantly more volatile now. So to match the 0.35% risk, you're only doing 2.8 contracts. Let's round that down to 2 for 82 ticks of reward. But your stop would have went way down here. So, and not as good as a reward risk profile this time. It's still okay, 1.3 to 1, but not as good. That's still okay. It's anything better than 1 we like. Stopped out on this one. This is why I recommend only taking the first trade, which is denoted by the bright green or bright red. Here's one of those bright red trades. Again, first short. This is a nice pop, fake rally into resistance, touching the standard deviation +1 band after dropping out. The standard deviation bands now are extremely fat. When they get this fat, it's highly unlikely that it's going to continue to rally. It's just too big. There's just been too much volume. For it to go higher is unlikely. In my experience, it's not going to happen. So for this to actually rally again and go and break above the second period standard deviation, not going to happen. You had the chance in here to go higher, but they killed it because they made it go parabolic over here, and it was just too much volume. Professionals are getting out of longs right here. They're not initiating new longs. They're using this liquidity to get out of these longs. That's the important part. So it's difficult to quantify what fat bands mean. I'm making quotation marks with my fingers, but trust me when I say that these bands up here are fat. I'm looking at this blue background up here. This is the standard deviation +2 up here, standard deviation +1 here, VWAP in blue. So rejected this, went right down to VWAP. This was a successful trade. 1.1 reward risk. Okay, not great, but not bad. And again, anything greater than 1 we like, using only 2 contracts. You have a choice here. Is this a sustainable short here? Do I just exit all of it here? You have a choice. You can exit all of it. You can exit half and wait for the short stop, which is what these kind of pink or magenta dots are. You would, if you exited the stop, you would have gotten a little bit more than where the exit actually was. You would have gotten a couple extra ticks beyond this target right here for the short target. It would have went a little bit lower and stopped you out on the way back up. You could do the opposite, what we were doing before, which is wait for this middle MA to turn green this time. So still in, still in, still in, still in. This is questionable to stay in here because you're almost all the way back up to your original position. You would be wiping out those other contracts that you took out. So this said to take out 2.7 contracts. Let's just round down and say 2. Let's just say you closed 1 here and you're holding the other one. Well, you almost wiped out your entire gain here. Now you're actually above where you actually entered. Your entry was right around here. You're actually above it. You're still better than break even, remember, because the risk reward was reward risk was 1.1 to 1. So even if you get stopped out at the original stop, well, that's okay because you closed half here and your reward risk is better than 1. So therefore, your net trade, even if you get stopped out at your original stop, which is where what this little marker is right here, you would still have a net profit. Very slight net profit, but you would have a net profit. So we can discuss why I would not do that. And the reason is because I like to take trades that are trending above VWAP on this lower time frame like this and have the potential to go up into the VWAP bands and have a rally. This didn't seem like it was going to have a rally. It seemed like we needed to consolidate first and possibly have a couple more longs, couple more shorts before it actually was able to sustain itself. So if you didn't do that, this middle band actually turned positive to green here. Right around this price, you would set your stop to a previous low high around here, which would have been 14.065. You would have been stopped out here. So you would have been, the net trade would have been better than break even. Let's just say that. You would have come out on top on this trade. So if you're holding to the standard, I will always take the first trade and I will always hold half until the middle band turns green or red, or depending on the direction you're doing, well, fine. You got a little bit better than break even. So far for the day, you've had a pretty good day. 6,000 plus that initial 750. That initial trade was 6,000 plus 750, 6,750 divided by 250,000. Remember, so on right now you're up 2.7% for the day, and on this one that might have scooted you over up to nearly 3%. We'll just call that a break-even trade, just because we don't really care to keep track of it. So look at all these whipsaws. Short building, no short executed, price went too far. Long building, no long executed, price went too far. It's in discovery mode right now, and it's too risky to get into a long because you don't know if it's going to go back up, or you don't know if it's just going to continue to go down. Here's where it starts to actually really break down here. And you can tell because the bands actually really change colors here. But no good trade was actually entered. There actually was a good trade that was entered for NASDAQ around here, but not for, for S&P 500, but not for NASDAQ. You would have actually taken the first short, I think, somewhere in this area right here, 5:55 a.m. Eastern time. But none of these trades are executed. So you're avoiding a lot of trades here because it's going too far and it's not giving you a chance to actually really execute a trade here. This one would have been a failure. You would have actually taken this trade because it's a first long entry. Failure. It's really whipsawing around here, so not a chance to actually get into some trades here. Here's a failure trade. You would have lost 0.35%. So let's just, out of our 0.027, let's just knock that back and say we're 0.27. 0.27 minus 0.0035. Let's just say we lost that trade. We're up 2.35% for the day. Let's just call that other one that we did a fraction of a percent. We're up almost 2.4% for the day. Let's just keep going here. Here's a short. First short, it's red. This one we got, how much did we get? Let's just call it, hovering over this, 1.3 to 1. So we would have got, actually, no, I'm sorry, I read that wrong. This is 0.47 to 1. So not as great of a reward risk. You're risking more than you're going to win on this trade. Your choice to actually take this trade. I would have taken it just because it's a first trade, but you could choose to hold on to it, choose to hold on some. If you held on to some of it or half of it, you would have only made 0.08% on that trade. So plus, I'm adding this up on a little calculator app here. Not a lot on that trade. So half 0.008. Even back here, you would have almost been stopped out compared to your original stop, but let's just keep going. You could have taken this trade. I might have taken this one because it's a better reward risk. This one was 1.46 to 1, but let's not take it just because we're sticking to our paradigm of only taking the first trade. Keep going. You could have taken this one. It's inside the lower VWAP bands. Remember what I talked about earlier, trending near the VWAP bands. This is usually a good idea to take all of these shorts. You could take all of them. This would have been a success. This would have been a success. But your choice to actually use them or not. This is where you actually might want to think about always having your initial stop set. Don't ever lose that initial stop because the price could come back and screw you over here. So here's where the middle moving average actually shifted up to green. And now we're approaching, this is into the US Open. So things are getting volatile. So right around here at about 942 or so, the price actually, the middle trend MA crossed to green. This is 14,015. You would have been stopped out actually over here back at 14,010. So in reality, you would have actually lost on this trade because you would have taken out some of a gain, but then you would have lost the other half of your contracts going all the way back up. So you would have only have taken out 1.3. So you would have only had been one contract max. So considering that you would have had to have been in micros in order to close half, because it's not possible to close half here, you might have just closed out this entire trade on this one, or not. You could have used micros here and closed out half. In this case, you would have taken out 13 micros. You would have closed 6 or 7 of them on the first hit. But dealer's choice on this one, you might have just closed all of them. Who knows? Sticking to the same concept, you would have probably lost maybe, I think, maybe 0.0015% here. So we'll just call that minus, possibly. Let's just say that. Keep going. Now we're in the US Open. This is a crazy bad entry on this one. You got back in and you were entering right at the top here. But since we're using risk percent mode, it's going to shave off a lot of contracts here because our stop is going to be way below the price. And this thing, because it's so volatile, it's thinking that your target can be placed way up there, all the way at 1492, which actually did get filled over here. So the reward risk is actually close to 1, but you're taking out almost no contracts here. You're only taking out 0.7 for the quantity to risk this much. So let's just say you took out 7 micros here. You would have gained maybe let's say on this one, you would have gained, reward was 0.28%. So you would have made plus, let's just say plus 0.0013 on that one. And then you're holding the rest for a couple more micros. So this is actually going to keep going up here. It's trending nicely today. Remember, we thought that we could get some bigger trades today, and we were right. Oops, I need to actually reload this. If this ever happens to you, just reload the chart. This thing right here is stopped. There was like some kind of an error for repopulating. It's a TradingView issue. You need to reload the chart, reload the entire chart. Just removing and doing this might not work. But you see how this is actually working. So depending on how you're trading, you're really only taking 3, 4, 5 trades a day, depending. You're trying to see which one of the trades is actually going to be the really big winner. So let's just keep going. So here we closed out 7 micros. We still got 6 micros executed 1440, and we're up almost 14040. We're up 150 points from that location. So if we still have, actually, I'm sorry, if we would only have 3 micros left out of this original trade. You could have added to this again, because look, we're trending up in these upper VWAP bands again. So you could start taking all of these reversion trades, because while we're in the upper VWAP bands, longs are extremely forgiving. So I keep repeating myself just because I really wanted to sink in that these upper VWAP bands means it's time to take the gloves off, because you have the tendency to get away with longs easier. And NASDAQ is trending really well today because bonds are bouncing after the CPI and PPI results. And my theory is that inflation is kind of peaking, and you're starting to see people like Gundlach and Mohammed Al-Arian actually saying things like inflation might be peaking. The 2-year bond and 2-year yield is a really good indicator of that. If the 2-year yield is starting to top and the bond is starting to bottom, even in the face of these crazy readings, it means that these readings might be kind of the peak of it. And remember, these readings are a month old, or a couple of weeks old from when they actually took them. So, but just going with our current profile here, we'd only have 3 micros left out of 150 points. Let's see what that is, 150 times 20, but we have to multiply that by 3, because we only have 3 micros left, only 900. And divided by 250,000 on this account, plus 0.0036. So we're still hovering somewhere around 2.5 to 3% gain on the day, which if you do if we say just 2.8%, that's about a $7,000 gain today. And we've only taken a couple of trades. So this is a way to actually trade these markets, and it's important to select the index that's trending the best. ES was struggling a little bit going into the open. It was really struggling to break out, and I think that now we actually have a trend here, and it looks like this price action today really is a hanging man from yesterday, and we're going to go up and break those highs and maybe have a rebound into Good Friday, which is normal. You would have been, faked out here. Is this going to actually be a long? No, but it told you not to go and take a long. It said it was potentially a long, but it went too far, and it waited until you got to this point here, which really kind of set it off. And this was actually a really good reward risk entry. So right here, you would have taken out 3 contracts. Let's say you just closed 2. 2 of those contracts would have been a third of the 0.5%. So on that one, you would have made 0.0016% on that. So that would have been, let's see, times 250,000 would have been about $416 on that one that you would have closed. Actually, no, I'm sorry. You would have closed 3 of them. You made about $820 on that one. Still holding one contract. Let's just say you held one. 4,400 was the entry. It's currently at 4,430. That's another $1,500. So 1,500 plus 800 is about $2,300, which is pretty close to that 1% target off of one trade. And again, you could have added to some of these if you would have taken additional longs. You can turn on or off the historical information to have it always on here instead of having to. I like it just having to hover over the previous one to see the previous information. But if you want to show all of them, you can show. Let's see where it actually is. Show historic trades. If you turn this on, it will actually turn on all the historic trades, not just so that you just don't have to hover over the tooltip, but I like it so that it hides the previous ones and you have to hover over, because I am all about removing all clutter from the chart. It's important for me to have that option to remove all the clutter, but if you want them on, you can have them on. So this is how I trade these indicators. This is it, and it really works to trade these indicators. It really and to trade this approach. And believe me when I say that I have tinkered with this to death. This is hundreds, if not thousands of hours into this one indicator that has probably 5 different other indicators and looking at 4 separate time frames simultaneously to make these trades. So it's waiting for a lot of conditions to happen in order to really hone in on the best trades, so that you're not really messing around here. So here was that trade here for S&P 500. The first trade for S&P 500. You got this one for NASDAQ back here, but this was the first one for S&P 500, and this was a better trade. Reward risk was not above 1, so you could further filter your trades if you want by going into this menu and saying, I only want to trade. I want to take only trades that have a minimum reward risk or of 1, and that will ensure the fact that you have these trades only showing up if it's going. It'll show still that it's building, but if it executes and the execution is showing that you got into a bad trade here. Sometimes that happens because maybe the execution candle was a huge candle down, and you're exiting towards the bottom of a big move down. You're like, that just took away like most of the gain of this trade. I really don't want to do that. I want to enter a trade where the price isn't moving around too much, and I feel like I got a good entry. And that's kind of important for trading too, if you're looking at it. But this is really how I trade. And if you're just doing these trades alone and following these guidelines on taking only the first trade, or maybe taking some of the other trades if it's actually up in the VWAP bands, and on days like today where you get a trending mode, and really taking advantage of that. And the only way that I've ever found for intraday trading to quantify good momentum trading, to really get greedy and start taking a lot of trades, is using these VWAP bands that show that the price is forgiving in the direction that you're looking at. And if you look at the previous sell days that we've had, they were all trading inside those lower VWAP bands and were super forgiving on the downside for taking trades. And if you want to get even more ballistic on trading, you can turn off this reversion trades only while staying in reversion mode right here. And you can get these other smaller scalps along the way, which again, I only recommend if the price is inside the VWAP bands or trading above it, if the price is trading above these VWAP bands. But you could basically use this top moving average. If the top moving average is inside those VWAP bands, start taking it, or just the price itself. So success, 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 failure on this one, hit, success, success, failure on this one. So you've got, and inside, since it started going in this VWAP bands, you have 1, 2, 3, 4, 5, if you count the reversion trade, 6 wins, 2 losses so far. That's pretty good, I would say. So you have like a 200% win rate or something like that, because you're winning, what is that? 3 times as much, three times as often. 6 divided by 2. I guess you could say that you're winning 3 times as often as you're losing. That's great. Even if the that is also, even if the reward risk is less than 1, which a lot of these are. This is 0.62. This is 0.47. That's okay. This one right here was what? This is 0.56. This is 1.1. This one was reward risk 0.53. This was 0.45. That's pretty good. As long if your reward risk is at least 0.5, but your win rate is 300%, 3 to 1, you're still crossing over. You're still net break. You're better than break even. You're doing okay. If you start to have things like, a win to loss rate that was actually even, you're winning as often as you're losing, and your reward risk is less than 1, well, that's a net loss, because every time you lose, you're losing more than your net, you're winning for each given trade, and you're losing as much as you're winning. So that's not good. So as long as that happens, I think that you're okay. So if you just, but the trick is you got to keep going and take all of these. You can't just quit and stop. You have to keep going and take them all. And you have a better chance of reaching your 1% target for the day if you wait for a trending day like this one, for the price to actually be in your favor. Another trick that I do is, if you have 3 in a row of a win, just quit on the next trade. So 1, 2, 3 wins in a row, quit that next trade, loss. 1, 2, 3 wins in a row, quit the next trade. That was a loss. Usually for the VWAP bands, I would actually say that the win to loss ratio is about 3 to 1. So if you ever get 3 in a row, just don't even do the next trade, because statistically, it's probably going to be a loss. This is like a weighted die that you're rolling, and you can't get too, lopsided as far as, the number of times that you keep rolling heads over and over again on like a weighted penny or something like that. So anyway, if you have any questions, let me know. I will attach this in the original MA Ribbon Master blog as a follow-up video. And I really hope that this helps as far as trading this strategy. There's been a lot of improvements since the original deployment of this strategy. And this particular mode is really the only mode that I like to use. I really hope that this helped a lot, and I'll try to make follow-up videos as we go along. But this is after a lot of updates, and this is really how I trade this. And I trade this every day. It's been really great, and it's been really profitable over the last couple of months. Okay, I hope you enjoyed the video. Thanks for joining. Take care.